All right, everybody, welcome. Okay, the 28th of, what is November? Hopefully it was a November to remember. You had a great holiday and all that good stuff, but it's back to work now. We got 4 solid weeks between now and the end of the year. I call these the 4 critical weeks. If you want to have a great next year, these 4 weeks are critical for you. But today, we are very fortunate from Prosperity Mortgage to have Dee Kirk. Dee, if you could please hit *6 and unmute yourself so we can hear you, that would be great.
Good morning.
Hey, good morning. How are you today?
I'm doing awesome. How are you?
Great, thank you. And I just want you to know, this is a joke, by the way, as a guy, if my last name was Kirk, I would legally change my first name to Captain Kirk.
Yep, Captain James T. Kirk.
There you
I grew
go.
up with him too.
Good job. I know, isn't he great? I love that show.
Yeah.
All right, so tell us a little about yourself, how long you've been doing this, and all that good stuff, Dee, please.
Okay, Rick. I have been in the mortgage industry since 1997. The majority of the time, I originated loans up in Montana, the state of Montana, Kalispell more specifically, or Glacier National Park, Whitefish Mountain, Big Mountain, that area, Flathead Lake, gorgeous area, and good second home location. A lot of people buy second homes up there. So I started off at GMAC Mortgage back in '97, and then became a branch manager at First Horizon in about 2003, and did that until 2008. And then I went to Wells Fargo for a minute and was a branch manager there. And then life happened, the meltdown happened. I stuck with the business. And then in about 2014, I decided to move to Vegas. And that is when I moved down here to Nevada. And I've been with Wells Fargo the majority of the time while I've been here.
Gotcha.
So that's a little bit about my career. And I'm really happy to be at Prosperity.
Awesome. And then Prosperity romanced you away, and now you're rocking and rolling. I see you mostly with John Ingram, who's awesome.
Yes, that's correct. Oh, man, I got to tell you, Prosperity came to me about, it was 7-8 months ago. And I have to tell you, it was the best fit for me. I think John Ingram and John Hendrickson and I felt like it was a really, really good fit. I've got the experience, the knowledge. I've done a lot of loans over the past 25 years, and it's just a really good fit. And I'm so excited to be here with the tools that the company has, the people that are involved in the company. I couldn't be happier.
Yeah, and it's got to be, and this is not a dig on Wells Fargo, but it's got to be fulfilling when you're a broker, right? You know where I'm going with this already. I can tell by your laugh. To be able to say yes more often than to deny, because Wells Fargo, Chase, Bank of America, you either fit that narrow line or you're not getting a mortgage from them, right?
Right, that's correct. And it's a lot more paper intensive. They see a lot of the information on the bank statements and stuff like that, and so there's a lot more questions. And I think the customer experience as Prosperity is much better. I love doing loans here, I have to tell you. Yeah, it's good. Yeah.
I'm very impressed because I've been at the company now for 8.5 years, and I'm very impressed in the people that Prosperity has gotten, because this is our fourth and last, because now we're both corporate owned, which is great. So now this is our mortgage company. This is our real estate company. This is how it's going to be. And I'm really impressed with the people, yourself included. And I'm even more impressed, Dee, because one of the best trips I ever went on, in my mid-20s, I used to have a horse. I actually had a couple of them for a while. And I went to Big Sky Country. I can't think of the name of the ranch I was at, but I went to a dude ranch, which they're now called guest ranches, and drove cattle from high to low or low to high. I think it was low to high because it was like June. I went through Yellowstone, the whole it was pretty amazing. It's a beautiful state in Montana.
Oh, it really is. It is a beautiful. The great thing is my mother, my sister, and my brother both sisters and my brother live there, so I get to go up there a lot. And I didn't mention I do have two amazing daughters as well. So, but they are
Awesome.
not in Montana, but the rest of them are. So I get to go up and see them all the time. I love it.
Good for you. Good for you.
Thank
Awesome.
you.
Awesome. Okay. So give us some tidbits about, this market, the interest rates, things going on, what you should be looking for as a buyer, as an agent. Maybe let's start with market condition. How's everything looking this Monday, the day after Thanksgiving?
Okay, so I took a look at rates this morning with 1 point on each of these. Conventional 6.125, VA 5.5, FHA 6.625, and jumbo is 6%. Now, these rates are much better than they were 2 weeks ago. We had
Much better.
much better. It's amazing. And they do, there's some people that predict that the rates will improve. We're going to have the CPI coming out in mid-December, but I think it's the 13th. And so we'll see, if we've got inflation, if it's going in the right direction to help mortgage interest rates. So rates are doing great. I got to tell you, today in this market, we need to look heavily right now at the 2-1 buy down. Agents, I got to just, if you don't understand it, get with your lender and learn about those, because there's a huge potential benefit here with the 2-1 buy down. What I want to say is, if you were to buy a $650,000 house, put 20% down, borrow about $520,000. If you get a 2-1 buy down, the seller is putting in about $12,000 into an escrow account. Okay. And with the prediction of rates coming down, people are probably going to look at refinancing in the next year. Okay. So
Right.
Let's pretend that they do that 2-1 buy down, and let's say that they have $12,000 in their escrow account. Each month, every month on the 2-1 buy down, that escrow account subsidizes the mortgage payment that the buyer would be paying. Well, when you go to refinance that, what happens is there's money left over, and we got to do something with that money. So that money is going to go to principal reduction. When the buyer goes to refinance, they'll do a principal reduction when they go to do the refinance. Now, when you go to do the refinance, you have closing costs. Another way to look at this, that little nest egg of money, that escrow account, is that will help with your closing costs on the refinance you're going to do in a year from now, 6 months from now, a year and a half from now, who knows? So that 2-1 buy down, you leave no money on the table. The buyer is enjoying it. And when I say that versus a regular buy down, when you get a regular buy down, you're spending that money to buy the rate down. And when you refinance, it's gone. It was used to buy down the rate. So if you don't know about the 2-1 buy down, learn more about it. It's an incredible tool in today's market.
Yeah. Yeah, and I think I agree with you. The rates will come down, and then you can refinance. And for some people that I know people that just want to buy, like if you buy, let's say you're at 6 1/4 or 6 1/8, like you just said, and you buy it down 2 points. Now you're at 4 1/8. Some people would go, you know what? Historically, that's a pretty incredible rate.
That's right.
So I'm good with that. So either way, it's a winner chicken dinner. Here's the thing that I think people are missing right now when I talk to them in my coaching and so forth, is that as a buyer, you have a tremendous opportunity right now, because the problem that we have as an industry hasn't gone away, meaning we have a housing shortage across the country, especially in, California, Arizona, and Nevada, where we have a lot of people moving in. California just always has too many people. Arizona has one of the most, one of the hottest markets of people moving in, and so is Nevada, is that we have a housing shortage, and people haven't stopped the need to have a place. They've just put it on hold because of the rates. So as the rates get better, more people will come off the sidelines. And so right now, as a buyer, if you have just a little bit of, just a little bit of savvy, meaning, you know what? It's not really rolling the dice. It's really getting the house you want, okay, with a 2-step mortgage instead of 1-step. But, when the interest rates were 3, 4, you are one of 14 people trying to buy a house. So take advantage of that now, I think is the message. Would you agree? Yeah.
Absolutely. Absolutely. You have more choices as a buyer. You're in a way better position as a buyer in today's market than you were in
Right.
January of 2022. Absolutely. And you're not paying top dollar. You're getting fair market. Yes, the rates are higher, but we can do something about that. And the old saying that it's a new saying of this year is, marry the home, date the rate, date the
Right, I
rate
love that.
because we'll refinance and take care of you later and get you a lower monthly payment down the road when we
Right.
see that improvement. So buy now. Absolutely. It's an incredible buyer's market right now.
Right. No, I love it. And when you were reading off the rates to me a few minutes ago, I was thinking, if you take the last 4 years, even maybe 3, off, out of the equation, people would go,
Right.
those are incredible rates, right?
They
But
are.
they are still pretty. Yeah.
Rick, I bought my first home in 1990 and I paid 10.5% on a 7-year balloon. So
Yeah.
and then like 2 years later, the rates start going down. That was 1990. So then we started seeing the rates improve, and oh my gosh, it was refi. I mean, it was just because we kept saving money because the rates kept coming down. So just because the rates are at 6.125, you know what? Buy the house. Don't be spending your money with the landlord and paying rent because you're guaranteed to
Right.
lose all that money. And yes, you might be paying a little bit more for the house with the interest rates today, but you're gonna build equity in the long run and come out
Right.
most
Well,
likely smelling like a rose.
if you do the 2-1 buy down and your interest rate's now down to 4 1/8, right?
Yeah.
Think about that. 35-40% of your payment goes to principal reduction. Like, remember when we bought a house? Like, my first house was, I had a 1-year adjustable, 1-year arm that adjusted 2 points up, right? And so it went from it was 9.999, call it 10. Then it went to 12. Then it went to 14 before I refinanced it, right? But think about that. Back then, 15% maybe of your everything else was interest. The rest was
right.
So
Right.
when you bought a house, you thought, okay, so I'm going to take advantage of the tax benefits the first few years, and then eventually I'll get to the principal reduction. Right now, your payment, a third of it or more goes to principal reduction right out of the gate. So there's really not a lot to complain about. We've just been spoiled the last 2 years prior to now.
Absolutely. We have been spoiled. Definitely. Yes. Yeah. I've shown the charts of the interest rates, the historic interest rates, and 6% is a great rate. It's always been a great rate. So
Are you kidding me?
we have been
It's fabulous.
spoiled. Yeah.
Yeah, because look at the other way. If you're only getting 6% on your retirement fund, you're going, what? That's low. But as soon as it's your mortgage payment, you're like, wait a minute. So I 100% agree. And I think and look at the appreciation we've had here. And Las Vegas isn't done, because Las Vegas has gone from fake city to just about a real city. And I say that as a compliment because we still have some places. We still have more to go. And we're going to go look at Seattle, New York, Los Angeles, New York, Boston. Look at what it costs to live there. And it'll take us years. But Las Vegas, Phoenix, especially Phoenix. Phoenix is already there to some extent. Massive appreciation. Your investments are secure. Buy another house as a rental,
Right.
if you can, is a great way to look at it right now.
Absolutely. Definitely. Yes. Yeah. Real estate is, with the exception of that pretty significant, during the meltdown, real estate has been a great investment, long-term investment.
Mm-hmm. Sure is. So the buyers who have the shortest memory or the ability to get over the fact, like I love when people tell me, well, I should have bought a year ago. Okay, so you're going to continue to penalize yourself? It doesn't make sense.
No. Yeah.
No, but it was better a year ago. Yeah, but okay, so show me the scenario right now that renting is better. Well, renting's not better, but I could have got a better deal a year ago. Okay, so you're going to continue to penalize yourself. Good job.
Right.
It makes no sense. I'm going to continue to hurt myself because I didn't do it a year ago. It doesn't even make sense.
Yeah.
But right now, there's benefits in that you can pick the house you want. You can actually have a home inspection, have sellers do things, an appraisal. You can get them to pay for rates downs because if you show them what the payment, I'm only comfortable with a payment of this, which would mean you'd have to come down $35,000 or pay $10,000, $11,000 towards a 2-to-1 buy down, which they're going to go, okay, I'll pay for the buy down. So sellers are willing to do that right now. They're doing it all the time, right? You guys are giving examples of that almost every day.
Absolutely. And we have some tools that we can use to show and compare a temporary 2-1 buy down to a permanent buy down so that the most important thing is when we get a customer or a buyer, we want to make sure that they're most comfortable with their finance, the loan we're going to give them. And so we need to give them choices. And then we have the tools to give them those choices. So that's what I like to do is listen to what my customer wants and then work with them to pick the best program for them. And then like I said, with the tools, the 2-1 buy down, it's a computer program. I just plug in the sales price, the loan amount, the interest rate, and then it populates and it shows you, which way based on your individual goals, which way is the best way to go on the buy down. So yeah, Prosperity has incredible tools to use and to help educate buyers.
Absolutely. I love it. Okay. So tell us a little about the through underwriting, all that pre-approval, and why that's helpful when you're negotiating to buy a house.
Okay, that's a great question. So one of the tools that we have is Lock, Shop, and Home. What the company wants us to do is to send most of our loans through underwriting up front so that we have the buyer pre-approved underwritten, so that all they have to do is look for a property, and we need the title report, the potential appraisal if we even need an appraisal, and then they close. So it leads to a quick closing. And with the rates being down right now, well, they could still be going down, but they could go up. We don't know, and so we can lock them. They can go shop, and then when they make an offer, the seller can be confident because underwriting has looked at the loan. Most of us, I think all of our Prosperity loan officers are very seasoned, so they understand and can figure out if a loan is going to fly pretty quick. But to have it go through underwriting is just that much more confidence in it builds more confidence in the whole transaction, so that there's no surprises. So that's the one thing that we push to do is to do that. And then that's when we offer the $10,000 seller or buyer close on time guarantee, is we've gone through all the dirty work, or the tough stuff with the buyer, and then we can have a quick on time close. And yeah.
And that looks good with your offer too. That looks really good with your offer too. When you have that commitment letter, which is not the same as a what do you call the other letter? This is a commitment letter subject to the proper. Oh yeah, pre-approval, right?
Yeah, pre-approval or pre-qual. Those are just that. Again, we're seasoned loan officers. We have a good feel of before we give that letter out. We know, we're dealing with a pretty strong borrower. But then to get that commitment letter from the underwriter should be more powerful in the offer and negotiations.
Right. Awesome. Looks great too. Awesome. All right. And any other programs that you would like to mention this morning while we on the topic of programs?
Okay. So 2-1 buy down. Okay. One other thing I just thought was really, really cool, and it has been successful for me, is the second opinion. So be aware, we might be contacting you to, if you go under contract, to see if we can give a second opinion. And what we'd like to do is just talk to the buyer and offer them interest rates, because our rates are very similar to the bank rates, but they're way better than a lot of our competition. are mortgage lenders. So, the mortgage brokers. We are way more aggressively priced. So most likely we're going to beat the competition. And if we can't, we're going to write a check for $1,000 to that buyer for coming to us and taking a look and seeing what Prosperity has to offer. So that is, you look like a hero if you're going to be
Right.
giving that person a second opinion, just like a doctor. Get a second opinion, and make sure that you're in the right loan program. You got the best interest rate, the lowest fees possible, and the agent's going to look like a hero, and they're going to be, grateful that a second opinion was given. And if we can't do it for some reason, $1,000 in the pocket. Now, how, is that bad? No.
No.
That's
No.
Yeah.
No. It's a great program. It's a great program.
Yeah.
And it makes the buyer feel better too, because they get a second chance. And a lot of times these other, like we just talked about, the big banks and some of these other mortgage companies, they're not going to spend the time and look at the avenues or even have the programs that can get people financed like you guys can, which is really great. That's what I like about it the most, is that, and you guys will even go up and above. If somebody can't be approved now, you'll help them with their credit. I know John's done it many times. I've talked to several people, about that. And, you set them up, get them their credit fixed up so they can give them a timeline. And you'll have clients for life, raving fans if you do that.
That's correct. At the big bank, I wasn't allowed to do that, and we could run simulators to help. I'm doing a deal for someone that they need to put 30% down now because their credit score is just below 700. But if we can get it to 720, they only have to put 20% down. So that's what we're going for. Is we're if you do this, and this, then your credit score could go up to this, and then you only need to put 20% down, and it makes that borrower, have to come in with less money to buy an investment property. So
Right.
we do have those tools available to, again, help everybody accomplish the goal of home ownership.
Right. And that's where you want to be.
Well,
All
yeah,
right.
we all
Well,
do.
I really appreciate you. I appreciate you. Any final words you want to leave these lovely people today, Dee? We really appreciate you taking your time out today.
Please give us an opportunity, Prosperity Home Mortgage. Lean into us. Ask us anything. We will help you. Let's build relationships, and let's make 2023 the best year that we're going to have. I mean, we have so much potential for next year, and let's make a lot of money, and let's get a lot of people in homes and have fun doing it.
I love it. I love
All
it. And
right.
the thing is that you're absolutely correct. And like I said, you guys got a great group of people. You're out there to help. We're on the same team. Plus, when you give your buyer, when they do their loan through Prosperity, with the old team concept, you're able to go out, do other things, be productive, and not have to worry about it. As an agent, that was my favorite thing. So, all right, Dee, thank you very much for your time today. Appreciate it. Everybody will do this again next Monday.
Appreciate
Dee, thank you.
Thank you. Have a great
Thanks, Dee.
week. All right, bye.
You too. Thank you. Bye-bye now.